Hey everybody, I was just perusing the CARES Act that was just passed by the House, and I was trying to find the text online, and I found the text of the Senate version, which I assume is the same. Um, so, yeah, I just wanted to make a couple quick things here about different segments. So this one is going to be about Title or Division A, Division B, relief for individuals, families, and businesses, Title I, rebates and other individual provisions. This is Section 2103, Special Rules for Use of Retirement Funds. So I haven't seen anybody else talking about this, actually. I was surprised to find it. Tax-favored withdrawals from retirement plans. In general, 72T of the IRC, the Internal Revenue Code, shall not apply to any coronavirus-related distribution. So 72T is the 10% penalty that you have on early withdrawals. So if you're younger than 59 and a half, you have any withdrawal qualified funds, IRA, 401k, SEP, whatever, then there's a 10% penalty. There are exceptions to that 10% penalty, like up to $10,000 for your first house, for expenses related to excess medical costs. There's an exception. Oh, my favorite one is if you have an IRS levy and you cash out your 401k to pay the IRS, they will let it slide on the 10% penalty. But now they're saying that for up to amounts of $100,000, then you will get a waiver or an exemption from that 10% penalty. And let's see, the purposes to qualify for this waiver or exemption, or however they end up doing it, is it has to be on or after the date of this enactment and before December 31, 2020. So that's going to be, well, today's March 27th, 2020, so maybe March 28th, assuming the president signs it tonight, to December 31st. So it's to an individual, well, that's going to be done anyway, who is diagnosed with the virus SARS-CoV-2 or with coronavirus disease 2019, COVID-19, by a test approved by the Centers for Disease Control, or if your spouse was diagnosed, then okay, same deal. Number 3 is most interesting, though. So, means any distribution from an eligible retirement plan made who experiences, to an individual who experiences adverse financial consequences as a result of being quarantined, being furloughed or laid off, or having work hours reduced due to such virus or disease, being unable to work due to lack of child care due to such virus or disease, closing or reducing hours of a business owned or operated by the individual due to such virus or disease, or other factors determined by the Secretary of Treasury or Secretary's delegate. So that's really interesting. So basically, if you are adversely affected monetarily, then you will not have the 10% early distribution penalty, and that's virtually all Americans. And they're doing a 3-year spread. This was the same thing that they did with the hurricanes, where you take it. I'm trying to remember the name of the form. It's like 88. It's not 8822. I'd have to look it up. But basically, you break it into thirds, and you take a third of the income this year, a third of the income next year, a third of the income the year after that. Now, it is income. You pay income tax on it. But it is by breaking into thirds, it makes it much easier to handle because especially if you're jumping brackets, you're reducing that effect, and yeah. So hopefully you will have withholding on your distributions, because I had one today. Guy pulled out $86,000 from his 401k and had 0 withholding, so he has a big tax bill. Not a whole lot to do. Anyway. Special rules, trustee to trustee, whatever, coronavirus, distributions treated as meeting plan distribution. Yeah, that's all fine. But that is a very interesting effect here, and they're modifying some of the loan provisions, delay of repayment, all that kind of stuff. But yeah, I hadn't seen anybody in the media or financial media talking about this particular provision, and I thought it was really interesting. So hopefully you do too. And if you plan on cashing out some 401k or IRA or whatever money, then this might be the time you want to do it. Because yes, you're going to pay income tax, but it looks like you are going to be exempt from the 10% penalty up to $100,000 of withdrawal, which would be $10,000 of penalty. So check it out.